So NIO just released their Q3 results and oh boy, are they good. In this video, I'm analyzing the whole Q3. I'm going to pick out all the highlights for you guys, do all the analysis. It's going to be a very interesting video. If you're a NIO shareholder, if you're thinking about purchasing shares, this is the video for you to watch. And watch the whole video to the end because I'm going to do some maths and calculate when I think NIO is going to be profitable. So stick around, it's going to be a good one. Welcome to Stock Flicks. If you're new to the channel, this is the place where you get the best in class stock picks. I'm a former investment banker turned stocks and shares educator. Now NIO have just released their Q3 results and they are fantastic. Let's jump in right now. I'm far too excited. I need to show you guys everything that they've been up to. So in front of me, I've got the NIO's third quarter results. And the first thing to note is their deliveries, 12,000 vehicles for the quarter, which is an uplift on their second quarter, which was 10,000. Now we knew that result already a couple of months back, but what's interesting to note is the breakdown of vehicles. And what stood out to me was, yes, they've had an uplift on their ES6 models by about 600 units versus the second quarter. They've had an uplift on their ES8 models by over 1,000 units, which is fantastic, but they've only had 16 sales of their ES6. Now, initially when I read this, it was a bit confusing, but the ES6 is their latest line that they've released. I'm not sure exactly the date when it was released to the public for purchases. I know it was launched in July. I know September it was open for deliveries. So that is an interesting number, and that's definitely a number to monitor for the next quarter. And I think they're making very, very good sales for their ES6 models for their fourth quarter, which I'll get into later in the video. But as investors, that gives us room to grow. That gives NIO an opportunity to expand their sales of their ES6 models far beyond the 16 number. If we see 500, 1,000, 1.5K in the next quarter, that's going to do fantastic things for NIO's earnings. So just to highlight 16 ES6s. And what I like about the deliveries is the steady increase. It's almost about a 20 to 30% every single quarter, which is fantastic. Obviously Q1, we had virus impact, and that's why we're seeing a very low number. It's a bit of an anomaly, so it should be about the 9,000 mark under normal circumstances. So you can see they've gone from 9,000 to the anomaly to 10,000 to 12,000. So there's really no loss of momentum of sales, and this is perfect. This is exactly what we're going to see. Nice, steady growth in NIO's deliveries for their cars. So their marketing efforts are working. They're getting traction. They're getting deliveries. They're moving in the right direction on a top line level. Next, we're looking at their vehicle margin. So their vehicle margin essentially is their profit just on the sales of their cars. So they have the sales of their cars and any costs associated with those sales, the material costs, the manufacturing costs, and then their vehicle margin is the profit on that. And this is amazing. A 14.5% vehicle margin versus a 9.7 vehicle margin in the last quarter. So these guys are really making very, very good steps to become efficient, managing their costs, controlling the sales of their cars, and they're producing a very, very, very good vehicle margin. Now that vehicle margin is going to trickle down their profit statement and eventually make NIO a profitable company. So a very nice jump on their vehicle margin. So to put this vehicle margin into perspective, let's compare it to how Tesla's shapes up. So NIO has a 14.5% vehicle margin. Tesla had a vehicle margin of 27%. That's based off revenues of 7.6 billion associated to their vehicles and costs of 5.5 billion. So 14.5% for NIO and 27% for Tesla. So this is pretty interesting. This is about a delta of 12 to 13% on the vehicle margin between the two companies. Now this to me is exciting as a NIO shareholder because this shows me that NIO has room to grow this margin. This margin can really improve a lot more than what it is now once they start producing more vehicles and have greater efficiencies with their raw material costs and their manufacturing processes. So there's room to grow if they can exercise these economies of scale that come with them becoming a bigger and greater company in the future. So fantastic on the vehicle margin front. This then trickled down into a very nice gross margin of 12.9% versus 8.4% on the quarter before, mainly based on their vehicle margin improvements. So now we're going to jump into the R&D for NIO and see how they've shaped up and how they've performed. So R&D actually increased for the quarter 8.4%. Now to me, this is a very good thing because NIO have numerous innovative plans and initiatives coming in the future. They are coming out with their second generation battery swapping stations where they're deploying 300 of those next year. They're also coming out with a 150 kilowatt hour battery, an improvement on their current 100 hour battery. They're also making good steps towards their autonomous driving capabilities. So to see an uplift, a nice controlled uplift of 8.4%, to me is very, very good. And when I'm looking at a company like a NIO that has a lot of innovative plans coming into the future and has to spend money on R&D, I look at its R&D growth versus its sales growth. And its sales growth was 22%. So we could see that the R&D growth is less than half of its sales growth. And this is fantastic. NIO is really in command of their costs. So moving on to their SG&As now, which is their selling, general and administrative expenses. This is a very key point to me on NIO's Q3 reports. So interestingly, they've had an increase of 0.4% versus their second quarter. To me, this is basically flat. They basically have SG&As, their marketing, anything associated to their selling, administrative costs have been flat versus last quarter. And this as an investor is exactly what I want to see. So here in NIO, we have a company whose top line, their vehicle sales is growing and their costs are staying flat. That is a recipe for success. So here again, I think we can bring in an interesting comparison to Tesla on their SG&As. What I like to look at is what's their SG&As as a percentage of their costs, because then it really shows you how much are they spending versus how much are they selling. Now, NIO has a SG&A as a percentage of sales of 20%. Tesla has an SG&A as a percentage of sales of 10%. So as you can see, if NIO is able to increase their top line, they're going to have a much lower percentage of sales for their SG&As. And this is what Tesla has achieved. And as we know, Tesla is a profitable company on a net basis. And this is the direction that NIO is going. So there is room there to get that percentage down and become a profitable monster in the future. So once NIO is able to increase this top line growth of vehicle sales and have a very nice constant or even better vehicle margin, the profits will then trickle down its profit and loss statement. Its operating loss will become a profit, and this will trickle down further till we have a net profit number for NIO. And this, in my opinion, isn't too far away, and I'm going to show you why. NIO also have a very nice cash balance of $3.3 billion. This is an uplift on their Q2 where they had about $1.1 billion. So they have cash in the bank to play with. Now, NIO also have a very, very good debt position. So in terms of their cost of debt, they have about a £16 million interest expense, and this is offset by an interest income of about 7 million. So this isn't a debt burdened company. They have cash reserves. This is looking like a real recipe for success. This is looking fantastic for NIO at the moment. So as an investor, we now know that their top line is improving. They're selling their vehicles. Their marketing initiatives are working. But not only that, we know that their costs are improving. They're getting more efficient. Their raw materials are cheaper. They're able to manufacture at a better rate. Things are looking very, very good for NIO. What I want to know now though is, when is NIO going to become profitable? Because as we know, as investors, that share price is going to skyrocket when they reach profitability. So can NIO become profitable in Q4? Management have said that they expect Q4 deliveries to be between 16 and 17,000 vehicles. This would equate to about 930 million. This is going to be a fantastic Q4 for NIO, by the way. We know that NIO has 87 million in R&D costs. We know that they have 130 million in SG&A costs. We can calculate if NIO is going to be profitable in the fourth quarter. So we take their revenue times their gross margin, which is going to be around 13% conservatively, take off our R&D, take off our SG&As. We know NIO's looking at an operating loss of about $104 million. Now, this compares to an operating loss currently of $139 million. So they're going to be improving. They're going to be on their journey to reach profitability. But when are they going to become profitable? So we know that NIO sales for Q4 are likely to be 930 million. If we apply 25% growth rate on that, NIO could get to 1.1 billion in sales for Q1 2021. Apply the same growth rate to that, NIO can get to a 1.4 billion in sales for Q2 2021. Same growth rate again. Q3 2021, we're looking at $1.8 billion. We then apply our gross margin of 15% to that, and we take off our R&D costs, and we take off our SG&A costs. NIO has a operating profit of $47 million. We then take off our interest expense, which is likely to be about $7 million. And the rest should flow down to a net profit of about $30 million to $40 million. This is by Q3 2021. So this for us investors is very, very exciting. If we act now, we could be investing in a company that's going to be profitable by Q3 2021. So guys, as you can see, we provide value bombs over here at StockFlix. Please do smash that like button and help this video get to 200 likes. Please hit that subscribe button. As you can see, it's a fantastic time to be a NIO shareholder. This company is really shooting for the stars, and they have just started. This is just the start of NIO's journey. Remember, they're looking to get into Europe. They're coming out with new models, their sedan in a couple of months' time. This company is doing amazing things. They're at the forefront of the battery swapping. They've done 1 million battery swaps, and they keep doing more. They're coming out with new and improved battery swapping stations next year. This company is fantastic. They've got a very good brand. They're growing their top line. Their costs are improving. They're becoming more efficient, and they have the opportunity, the potential to become profitable by 2021 Q3. Guys, this is a fantastic company. They're doing amazing things. And to top it all off, they operate in a market which is growing. EV is where the world is going. It's where the world is going globally. The US, China, Europe, they're doing fantastic things. And it's never been a better time to be a NIO shareholder, in my opinion. Guys, thank you for joining me today at StockFlix. I hope you've liked this video. Please do subscribe to the channel. We are growing here at StockFlix. We're building out a fantastic community, and it'll be fantastic to have you along for the ride. Guys, all there is left for me to do is just to wish you a very, very good day. Take care now.